All right, welcome to the Explainer. Today we are going to crack the code on that powerful three-digit number that pretty much shapes your entire financial life, your credit score.
You know, it can feel like this mysterious grade that just follows you everywhere, kind of dictating what you can and can't do with your money. But what if you could understand exactly how it all works? What if you were the one calling the shots?
Okay, so first things first. What is a credit score, anyway? Really understanding the what is the absolute first step to mastering the how.
And that's really it. I want to be super clear here. It is not a measure of your worth as a person, and it has nothing to do with how much money you make. It's just a forecast, a prediction of your financial reliability that's based on what you've done in the past. Think of it like your financial reputation, just boiled down to one number.
So how in the world is this number even calculated? Well, it's not some kind of dark magic. It's actually a lot more like a recipe with 5 key ingredients. And here's the kicker. They are definitely not all weighed equally.
Okay, and this is where it gets really interesting because it's simpler than you might think. Just look at this. 2 of those ingredients, your payment history at a huge 35% and the amount you owe at 30%, they add up to a massive 65% of your entire score. If you get those 2 things right, you are most of the way home.
So that first piece of the pie, the biggest one by far, it's your payment history. It boils down to the most basic question of all. Do you pay your bills on time? Simple as that.
And trailing right behind that at a hefty 30% is the amount owed. You'll often hear this called your credit utilization. Basically, how much of the credit you have available are you actually using? Nail these 2, and believe me, you are in great shape.
All right, this is where we have some fun. Because, knowing the ingredients is one thing, but there is so much bad advice out there. So let's bust some of the biggest myths that might be secretly holding your score back.
Come on, you've heard this one, right? This idea that you need to keep a little balance on your card every month to show that you're using credit. It kind of seems like it makes sense, in a way.
Yeah, but the truth, this is one of the most damaging myths out there. Carrying a balance is a terrible idea. It doesn't help one bit. In fact, it hurts your score by pushing up that amount owed factor, all while you're literally paying for the privilege in interest. The absolute best thing you can do is pay your statement in full every single month.
Okay, this one causes so much unnecessary anxiety. It stops people from keeping tabs on their own financial health because they're terrified that just looking at their own score is going to make it drop.
Let's set the record straight. You can and you should check your own score as often as you want. It's called a soft inquiry, and it will never harm your score. The only thing that can cause a small, temporary dip is a hard inquiry, and that's only when a lender pulls your credit because you've officially applied for something new, like a mortgage or a car loan.
It seems like a good idea, right? You're being financially tidy, cleaning house, cutting up that old card you never use. It feels like you're reducing your risk.
But whoa. Closing a card, especially an old one, can backfire spectacularly. It hits you with a nasty 1-2 punch. First, it shrinks your total available credit, which can make your utilization percentage spike overnight. And second, it can chop down the average age of your credit history, another one of those key ingredients. So unless that card has a crazy high annual fee, it's almost always better to just keep it open.
So, now that we've busted those myths, let's get to the real heart of it. Why does any of this even matter? Why should you care about a few points here or there? The answer is really simple. It's about cold, hard cash.
Just take a look at this. It's based on Federal Reserve data. For a totally normal $20,000 car loan, the difference between having an excellent score and a poor one is more than $7,000 in extra interest. That's a family vacation. That's a kitchen renovation. That is real money that could be in your pocket instead of the bank's.
So, the absolute key to managing that huge amount owed part of your score is this one concept, credit utilization. All it is the amount you owe on your cards divided by your total credit limits. The general rule of thumb is to keep it below 30%, but honestly, the lower, the better.
And look at this chart. It couldn't be clearer. People with those top-tier exceptional credit scores, on average, they're using just about 7% of their available credit. And folks with poor scores, they're using over 80%. The data is screaming at us. Lenders look at low utilization and think, okay, this person knows how to manage their money.
So, when you boil it all down, mastering your score isn't about some complicated secret. It's about these 3 simple, powerful rules. Pay every single bill on time. Keep your balances as low as you possibly can. And keep those old, no-fee accounts open. That's the core of the whole game right there.
Okay, Let's wrap this up with a final, really important thought. This is all about changing your mindset, from seeing your credit score as something that just happens to you, to seeing it as something you actively create.
This is so important to get. Your score is not a moral judgment. It's not someone saying you're a bad person. It is a data-driven reflection of your habits. It's just a tool that lenders use to manage their risk. That's it. Nothing more, nothing less.
And you know what the best part is? Unlike a test you take in school where that grade is just final, your credit score is alive. It's dynamic. You can always improve it. Every on-time payment, every dollar you pay down on a balance, it's a step in the right direction. You have the power to change that number.
Because at the end of the day, that 3-digit number tells a story about your financial journey. By understanding the rules and busting the myths, you stop being just a character in that story and you become the author. You get to decide what happens next.